This is the Growth and Value Podcast, empowering and inspiring stock investors, helping you take control and make a difference with your investment dollars. Looking for quality stock tips? Well, we may or may not be talking about Apple. We may or may not be talking about Google. We may or may not be talking about Disney. However, since we use our proprietary algorithms to screen, analyze, and rank over 6,000 stocks every week, we will be talking about timely investment opportunities. So you may often hear the name of a company you haven't heard of before, and you know what? That is often the best kind of opportunity, an opportunity to get in early before the investing masses. The Growth and Value Podcast is made possible by Connor Management Group, a registered investment advisor firm. Hi everyone, Mathis Connor here with Connor Management Group, and this week we're going to look at the best dividend stock to buy right now. Today is Tuesday, November 11th, 2014, and on the opening slide we see that this company is in the integrated oil and gas industry, and we see its 6-month potential at 26.3%. On to the second slide. This is actually a well-known name for a change, and the name of this company is called Royal Dutch Shell, or as most people know this company as Shell. Once again, we see their 6-month upside potential at 26.3%. This company is in the integrated oil and gas industry, and their ticker symbol is RDSB. On to the quick facts slide. Shell is basically one of the world's largest oil companies with about 87 to 90,000 employees in about 80 countries. Here's a formal description. Royal Dutch Shell operates as an independent oil and gas company worldwide. The company explores for and extracts crude oil, natural gas, and natural gas liquids. It also converts natural gas to liquids to provide fuels and other products. Markets and trades natural gas, extracts bitumen and mine oil sands, converts it to synthetic crude oil, and generates electricity from wind energy. The website is www.shell.com. The company is headquartered in the Netherlands. Actually, we couldn't find what year the company was founded. As mentioned, the number of employees ranges between 87,000 and 90,000 employees worldwide. Their ticker symbol is RDSB. The sector they operate within is basic materials, and the industry they operate within is integrated oil and gas. Over the last 12 months, the annual revenues for Shell were $438 billion. Yes, very large number. The net income over the last 12 months was $16 billion, and the cash from operations over the last 12 months was $41 billion. Yes, a very large company. Their market capitalization stands at $148 billion. On to the products and services slide. Basically, we have excerpts from a recent investor presentation Shell gave. And let's see, on here we have the Shell logo, of course, and also on the slide we listed out their 2014 priorities, and basically they are to improve their financial performance by focusing on cash flow and improving returns to shareholders. Their priorities include enhancing their capital efficiency, basically taking a hard look at choices on new capital expenditure options, increasing the sales of some of their assets, and reducing the growth of their investments. And additionally, another one of their priorities is to deliver new projects. Basically, they have some major deep water startups that began in 2014, and they also want to integrate, focus on integrating some of their 2013 acquisitions. The business for Shell is basically divided, as with most oil companies, it's kind of divided up into two segments. Usually it's called their upstream segment, and Shell calls it Upstream Americas, which kind of focuses on the business part of pulling things directly out of the ground upstream, and their downstream business, basically additional processing and value adding to those products they pull out of the ground. So Shell's upstream business focuses on deep water extractions, oil and gas pulling out of the water, heavy oil on land drilling, and they're additionally starting to look at LNG opportunities as well as some Arctic drilling opportunities. The downstream business kind of focuses on what's called Shell Chemicals, which is pretty typical for most of the major oil companies. They have a chemicals group that processes and refines the oil and gas and liquids that they extract out of the ground. And Shell, of course, has their Shell gasoline stations, so there's additional processing of the products that they extract and drill for. So they have the upstream business and their downstream business. On to the metrics slide. Once again, the annual revenue for Shell was $438 billion over the last 12 months. The net income was $16 billion, and the cash from operations of the last 12 months was $41 billion. The operating margins have improved just ever so slightly. In 2013, the operating margins were 10.7%, and in 2014, they're tracking to be 11.5%. On to the valuation metrics. The trailing PE ratio stands at 14.6, and the forward PE ratio stands at 10.3, and that implies that the analysts on average expect earnings to increase quite a bit for Shell. So from 14.6 to 10.3, that's a nice implied percentage increase in earnings. The PEG ratio was not available. The price to sales ratio was 0.5. That's a pretty low number. And the price to book ratio is at 1.3. Also a low number, possibly indicating some value. The enterprise value to EBITDA ratio stands at 5.4. The recent closing price for Shell on the New York Stock Exchange, their ADR shares, was $74.44. The 52-week low was $67.57, and the 52-week high was $88.13. So you can see right now the recent closing price is really kind of in the middle between their high and their low price. I mean, I guess arguably a little closer to the low than the high. The 20-day moving average for Shell is $73.10. The 50-day moving average for Shell is $77.20, and the 200-day moving average is $80.67. And that relationship implies that the stock has been pulling back a bit in price, which it has. The average daily trading volume for these ADR shares are 554,000 shares per day. The beta for the stock is at 1.3, so the stock is ever so more volatile than the market. And the dividend yield has a very nice dividend. It stands at 5.1%. And the average dividend payout ratio for Shell is at 43.3%. So this looks like a great opportunity, and it pays a very healthy dividend. I mean, the average stock pays a dividend of about 2%, and Shell is paying double that, and they have a very strong balance sheet. On to the price chart for Shell. The ticker symbol, as mentioned, is RDSB. We see that the stock started the year out a year ago a little below 70, and now it's just around $74. The stock's pulled back from its high point of around $86, $87 back in the it looks like June, July time frame. We're not sure exactly what the pullback is from. It might be due to just the recent pullback in oil prices in general, but we feel like it's a good opportunity. Over the past year, Shell has increased 7.5%. The stock price increased 7.5% over the past year, and we think that it has some nice upside potential based on a lot of the activities management has been doing as of late. On to the summary slide. The financial statement quality for Shell is excellent. The operating margins, we rate that as flat. They've improved ever so slightly, but we'll still say flat. The price pattern trend, we'll say is flat. I mean, it increased but pulled back a bit and the stock's only been up 7.5% over the past year. Well, that's a reasonable appreciation. I shouldn't say only. And our overall market outlook continues to be neutral. We see some overvalued names and we see some undervalued names, but we're not overly bullish or bearish one way or the other. And just to color some light on what Shell's been up to. Over the past year, Shell's gotten a new CEO, and the CEO is basically stressing more financial discipline and being a lot more cautious about how they spend their cash. They're undergoing sales of present assets. They're trying to sell $15 billion worth of assets by the end of 2015. And additionally, they are pursuing the development of a number of oil and gas projects worldwide, particularly in Malaysia, in the Gulf of Mexico, and they are also pursuing a large LNG project in Australia. Additionally, Shell has filed an IPO to form a master limited partnership for its pipeline business, and that's expected to drive quite a bit of additional shareholder value. So Shell has been doing a number of things right. Wall Street has been following it a bit more closely, and overall seems to be pleased with the actions taken by the new CEO. So the recent closing price for Shell was $74.44, and our 6-month price target for Shell stands at $94.04, and that gives the stock a 6-month potential of positive 26.3%. And it is for all these reasons that we believe that Shell is the best dividend stock to buy right now. We hope you found this presentation helpful, and we'll talk to you again soon. Take care. Bye. Hi, this is Mathis Connor from Connor Management Group, and I just wanted to take a few more minutes to give you some background about myself and Connor Management Group. First of all, if you enjoyed this podcast, and I hope you did, and you have been over the past few months or so, please write us a review on iTunes and Stitcher. We really would appreciate it, and it would help us get more subscribers. So that's something we'd appreciate. So for the podcasters out there, please go to Stitcher or iTunes, and for you guys on YouTube, I'd appreciate thumbs up and like, as well as just becoming a subscriber to the CMG Stock Picks channel. All right, well, that's what I wanted to say with regard to the podcast and YouTubers. Hey, try to be efficient. But I wanted to share a little bit about myself. Basically, I've been told from some friends and listeners that know me that I could enlighten my audience with a little bit more about myself. So I'm not all that comfortable with telling about myself. I really kind of want you to enjoy the content. But for those of you that have an interest, this is why this stuff is all the way at the end. So, okay. My name is George Mathis Connor. My background is that I have a bachelor's in mechanical engineering from a place called Rensselaer Polytechnic Institute, engineering school in upstate New York. A master's in engineering from Cornell University, also in mechanical engineering, and I have an MBA in finance from the University of Chicago. So hey, that takes care of my educational background. Basically, bottom line is to see, I did a lot of schooling. What my career experience has been to date. I started out my career as an engineer, did a few years of that. Worked on a lot of cool landmark renovation buildings in New York City for a few years. One of the most high-profile ones was my company, or I should say the company I worked for, was part of the renovation team of Grand Central Terminal. So for those of you that passed through there, I've spent a number of years in and out of every cranny of that building and facility. I also worked as a banker in New York after I got my MBA, And basically I worked on financing a lot of large-scale infrastructure projects, mostly power plants, but I worked on some basketball arenas as well, and some chemical plants, and even some coal mines. I've been deep down in the ground a number of times in my career. Additionally, let's see, after that, started working on the investment side of developing power plants, and particularly I spent most of my career with a company called Enron and another company called GDF Suez, where I worked on the development of power projects where where I acted as a equity investor for whether we were going to build them or buy them or sell them. And after GDF Suez, I am now an investment manager, and basically, I've been studying deals over the years, learning to build complex financial statements, always evaluating them, the cash flows, and making sure that these things to be profitable. And investing in the stock market was always a hobby of mine that I took more and more serious over the years. So after a bunch of time, I just, I'm really going to go after this. And so I spent maybe about, say, 3 years actually working on the development of some proprietary algorithms. I was just convinced that with my mathematics and computer background, coupled with all these financing deals, of which I became very good in with accounting and finance, I thought that I could at least find one way of consistently finding stock opportunities. So it was the development of these proprietary algorithms and me having some success with them that led me to the development of Content Management Group and the development of all these videos and podcasts you've been seeing and hearing. And I am pretty happy with these algorithms. Basically, they review, analyze, and rank over 6,000 stocks every week. They're pretty comprehensive and pretty thorough. The algorithms use fundamental technical analysis and also consider some macro level measures. And another thing that's pretty unique is that these algorithms estimate future stock prices with specific time horizons. I haven't seen too many people on the web that will give you a potential stock price, say consistently say this is what we expect the price to be in 6 months, or this is the price that we expect there to be in 12 months. And I think for most of the videos and podcasts that I produce, you've always heard me give a potential stock price going 12 months out. The premium subscribers actually give them a stock price for the top stock prices for 6 months out. So that's about what I have to say about the algorithms. Additionally, about Content Management Group, our primary offering of CMG LLC is that we are a managed account service. And basically, a managed account, for those of you who don't know, is basically a more hands-on, customized way of investing for the long term. It's basically a complement or a supplement to 401k or IRA and it has more benefits. And basically, you probably haven't heard of these as much or over the years because they've just become a lot more available to middle-class investors. And that's primarily because of advances in software for being able to handle many clients and move them in and out of custom portfolios and options. So if you want to know more about our managed account business, please go to ConnorMG.com. That's www.connormg.com, or you could go to our website and you can see a presentation that compares Content Management Group side by side with other managed account providers. E-Trade provides managed account service, Fidelity does, a lot of other mainstream firms. And like we said, basically now that the technology is advanced with software, it's a lot easier to manage. So basically, as with E-Trades, the minimum size of account we open, say $25,000. And while as I'd say 10 years ago or more, minimum account size is probably $500,000. So there are a lot of changes, and you'll be hearing more and more about this account service, as time goes by. Additionally, let's see. Additionally, you can get to know us through our social media footprint. Basically, we have a presence on all the major websites for your convenience, and there you can get a lot more articles and hear about different points of view on things going on in the market. So we have a presence on Twitter, Google Plus, and Facebook, as well as LinkedIn also. So you can be kept abreast about thinking on stock investing, as well as things we share by others who we consider thought leaders. And finally, CMG offers 2 newsletters, both weekly, 2 weekly newsletters. One is to keep investors up to date about relevant news and provide in-depth analyses on a quality investment opportunity. And those opportunities are consistent with the free weekly podcasts and videos. And the other newsletter we provide is our premium newsletter, and that one provides the latest top picks from our proprietary algorithms that we run every week. So, feel free to go to CMG stockpicks.com, and you can go there to subscribe to the newsletters. And if you go to the website, you can also view this deck and or any of the decks going forward, and there'll be a link there to everything I've just talked about. Basically, everything from the podcast to the newsletter to the presentations about our managed account service. So, hope this was helpful. Nice overview. Hope it didn't bore you. You can listen to this a couple times. That's why I put this at the end of the stock presentation. And I'll talk to you soon. Take care. Bye.